Ross, how are you doing?
I'm good. How are you?
I'm doing
It's a long time.
I know. How have things been going? It seems like a lot of things that you were excited about maybe a year ago or so, they're all playing out pretty nicely there, my friend.
Yeah, so far so good. We're having a little interlude as the Fed, gets its act together this year. But we like the opportunity in the markets right now, and we're seeing some nice fear, and I like it.
Let's talk Fed first, because I think that's kind of what's on everyone's mind. We're recording this the day of the FOMC meeting. We're expecting them to go ahead and announce a 50 basis point hike. It seems like, on the last 2 years, don't fight the Fed. They're pushing everything up. Just get long and chill. Now they're intentionally pushing things down, and so maybe you don't want to be as long as you previously were. Is that the trade of the decade? Is just whatever the Fed tells you to do it, and then you win?
It's pretty much the trade of the last 3 decades, really. If my whole career, there's only one person that's ever killed the economy, and that's the Federal Reserve Chairman. And, even Greenspan did it. And actually Powell did it in 18. You think he would have learned his lesson in 18. But right now we went from a stage, if you look at it from the pandemic was probably the worst economic event in American history. We shut down the entire economy and we made up for it by printing tons of money and having, just a free for all at the Fed. And now, it's worked and things are really good in the economy, and the Fed has to just get back to normal. And people look at that as the end of the world when it's actually what's supposed to happen. So valuations come back to normal. I don't see this as any crazy thing. So you just got to kind of wait until the Fed's done with their game, and then we're game on again.
What do you think they're going to end up doing? So the market's pricing in 50 basis points today, 2.75 to 3% by the end of the year. Do you think they can hike that much, or do you see them stopping at some point? Maybe will there be a Fed interest rate cut before the end of the year? How do you think about this?
Well, that would be the classic Fed. You see that a lot with the Fed, where they raise too fast and then they're like, oh, and then they do this one cut just to make the market happy and get the economy going again. That's actually not uncommon.
That's what I think. That's what I think they're going to do, by the way. That's my bet.
It's not uncommon.
Yeah.
That wouldn't surprise me at all, because what I actually think is, you have this pandemic, stimulus response thing where now everybody's partying like crazy and going out like crazy, and trying to go to Europe this summer is impossible, and every event is sold out, from Coachella to the Met Gala or whatever. And so when you look at what people are doing, they're out and they're spending money, and that'll calm down in 6 months or a year as people go back to normal and sort of get it out of their system. But I still think that it'll take a while. And people have jobs and they're getting raises and they're spending money. So this is a really good backdrop for the Fed to raise interest rates into. The bottom line is they're behind the curve. And that's why I'm not so concerned about them right now is I think 1.5 to 2 is probably where they need to be right now. And so they're not there. So they got to catch up to 1.5 to 2. But once I think they get to 1.5 to 2, they're going to have to really reassess where the economy really is, because high oil prices and high inflation does affect spending eventually, and people will spend less. And so I think as we get towards the elections, we'll see the economy slow and inflation come down. And I think the Fed will have less pressure on them to be aggressive.
Yeah, one of the things that I keep going to is, if we already had the, kind of annualized 1.4% contraction in Q1, if they continue to hike the interest rates, they push us more towards not just a slowdown in the economy, but a full-on recession. And, I joke all the time that what's worse than high inflation for a politician going into an election is a recession. And so if we get to a true recession where people are feeling it and it's very obvious that it's here, regardless of what's happening with inflation, I think that the Fed will just get pressured, right? It's just, hey,
I just don't think that's a reality this year. I don't think the Fed can hike fast enough, unless they're just crazy, to cause a recession this year. What I'm worried about is the beginning, middle of next year, where it's all this stuff finally compounds up. We get through Christmas and travel and maybe there's another surge of some sort, and then we look into the first half of next year looks real bad. But I actually don't think that's going to happen either. I I think the Fed will do everything possible to avoid creating recession. They will lower rates. They will print money. They will do anything they need to do to prevent a recession. So I'm not that concerned about it because the demand is so high for labor right now.
Yeah. When you start thinking about various assets in the market, obviously stocks, I think people understand, hey, when the Fed's got the money printer on, they go up. When they stop, they go down. And that seems to be what most people are experiencing at the moment. When you're talking to clients, like, how do you talk about these types of environments? Is it a thing of like, hey, just try to get into cash and just hold cash? Is it actually buy the dips, or like what's kind of the general talk track?
Well, we're typically managing stocks and bonds for clients. So, when this all started with the inflation stuff and the Fed a few months back, I sold all of them, sold all my bonds pretty much. I'm much more concerned about bonds than stocks because stocks actually do okay in inflation because you get higher pricing. It's bonds that just have like negative value, so all of a sudden, if you're buying a 2 or even a 3%, treasury bond, you're losing a lot of money right now. So that makes no sense to me at all. Like, and then there's no upside, right? Like, what's your upside in a bond today? It's negative, right? So bonds are really where the highest risk is because you have no real upside and you have lots of potential downside. So we immediately moved to more cash. So we're holding like more cash than I really like by a large amount right now because we just don't really have much of a bond allocation. So we're looking at inflation protected treasuries and floating rates are really the only game in town. And then these like high yields, like, AMC bonds are paying 14% still. So, stuff like that. So you hold a lot of cash and then on the equity side, what we have is actually equities are in a way fine. It's just we're having PE contraction, and PE contraction obviously hurts growth names like that I typically like more than it, affects Campbell Soup and, Chevron. So because we don't own Campbell Soup and Chevron, we're underperforming substantially right now. And we know this, because we're not going to start buying Campbell Soup and Chevron because these are just temporary shifts in the market as we have this rising interest rate environment and rising inflation environment. And so you just have to be patient, like I've done this for so long and you want to buy and trade and you want to make money on the upside and it's just not going to happen right now.
Yeah. And when you start to think about this, so let's go to.
So that's what I tell clients. You just have to be patient, like they want to make money every year. I make 15% a year for these people in a 60-40 portfolio. And then we finally have a bad year and they're like, oh my God. And I'm like, dude, look at the last 5 years. We've averaged 15% a year, including this year right now. I'm like, we were way above trend line. Like, what did you think? It happens. So, most of my clients have been around, I've been doing this almost 30 years. So it happens every cycle. You get the rising interest rate period of time and you got to sit on your hands.
Yeah. When you think about some of those growth stocks, I think Tesla is probably one of the biggest ones, one of the most popular ones. I know that you're a huge fan of Elon and of Tesla. Talk to me a little bit about what you think about kind of that business and maybe headwinds or tailwinds that it has.
Well, Tesla, I would say, is the exception to all the things I was just saying because they're executing so well, and the environment for Tesla couldn't be better with gas $6 a gallon here in LA. All you see are Teslas like everywhere now. So like you're almost like an idiot if you go out and like I saw somebody just bought a new Explorer in my parking lot, and I'm like, you must be like an idiot. It's like you're going to pay $6 a gallon for 15 miles a gallon in traffic or 10 miles a gallon in traffic in LA. I'm like, you're spending $150 a week just driving your kids around to baseball and stuff. And I'm like, I spend nothing, I'm like, if you don't like inflation, you go buy an EV. It's simple as that. And so people are. And so the demand is far outstripping the supply. And the real game is supply. Can we make cars? And with China, that's just been a huge problem. So China is the biggest problem for the global economy right now. It makes interest rates seem like nothing. Honestly, like I don't even spend any time worrying about the Fed. I'm worried about China because we make a lot of stuff in China. We make cars in China. We make phones in China. We make half the stuff I own makes stuff in China, and China's like whack-a-mole with COVID, which is definitely a losing game. And, it's a mess. It's just a mess. So it's hard for Tesla to manufacture right now in China, which is their best market to sell and manufacture. And we have new plants that are coming up in Austin and in Berlin, but we're, 12 months from efficient, production. And so it's a really great time for Tesla right now, but this is a super challenging time as well.
Yeah, it makes a lot of sense. Obviously, Elon has done a fantastic job building that business. He now he's turning his attention to Twitter. A couple of things here. So, what's your general read on the whole Twitter situation? Are you a fan of Elon doing this? Do you think it's a distraction? How do you read it to start?
Well, I'm going to tell you some things, Pomp. There's a lot of misinformation going around about this whole Twitter thing. And I just read in the paper that the head of the CIA flew out to Saudi Arabia last month. And I think it was to tell them that we were taking Twitter back from them. And that's what this is really about. Whether people want to, worry about Donald Trump being on the platform. Oh, no, God forbid, the right wing might have free speech or this or that. What it's really about is foreign interference in our elections, in our democracy. It's gotten to a horrible situation in America and in Western governments. Now with the war in Ukraine, it's become so obvious, the misinformation that's put out on Twitter daily, the constant attacks, the bots. It's became a national security issue for the United States, became a major issue for Tesla because Tesla uses Twitter as its main advertising vehicle. And Elon felt it was time to step in and take this asset back from the foreign actors that have been manipulating it.
So a couple of questions. First is, you think Saudi Arabia owns Twitter, or what's the
they do own Twitter. They own 6% of Twitter, but I think they control Twitter internally.
And in what way? Do you think it's part of the content moderation decisions? Do you think that they've got some sort of leverage over the executive team? Tell me more about that.
I think they've implanted people in executives from all the way through the company that are acting to help with the misinformation campaigns that have been so effective on social media. Saudi Arabia and Russia being the two biggest beneficiaries of these misinformation campaigns. We have a very insidious thing going on in social media, and with Instagram and Facebook, we have no ability to get control of these assets because Zuckerberg controls it like the great overlord of misinformation. And we're seeing it in countries like India, where Modi has used it to oppress people and really fervent nationalism against the Muslim population in India, and it creates violence and oppression, essentially. So Zuckerberg and Sandberg are perfectly fine with all of it as long as they make money. And I think people like Elon had enough of this stuff. So now he's stepping in and using his considerable financial might to do something that I think that's going to be a benefit to our society and very profitable for ultimately Twitter shareholders.
So my understanding is he's basically putting up some of his Tesla shares as collateral, and then also getting a bunch of financing and kind of putting together what is going to end up being a somewhat complex deal. As a Tesla shareholder, do you worry about the Tesla shares being collateralized to help finance the acquisition of Twitter?
No.
What do you like? How do you evaluate
it's like a 25% margin position. So it's not like he's highly leveraged in it. And quite frankly, I think the Tesla shares are the most valuable shares in the stock market. So, I don't really spend much time worrying about that either, because, like when Elon sold shares last week, it was to a benefit of the public, because he's not operating Tesla. He went from owning 17% of Tesla to 16% of Tesla, and it pushes the price down and allows other investors to buy Tesla stock at a cheaper price, when we all know the information that's out there that Tesla is executing brilliantly right now in a product that's in such high demand that they really just can't supply it. And what I'm seeing from yesterday is it looks, and this is what's going to happen next. So maybe this is the first place I'm really saying this, is that Tesla is prepared to build a second gigafactory in Texas and a second gigafactory in Shanghai. And I expect formal announcements for that fairly soon.
So you think that they're going to build a second gigafactory in Texas and a second one in Shanghai, along with the plans that they've already publicly announced?
Yeah.
Why do you think that is the plan?
Because I thought about it last night long enough. You
just did some thinking and you just said, hey, if I was Tesla, this is what I would do.
I can't tell you everything, my sources of information are deep.
All
really
right.
deep. I dig a deeper hole than anybody in my business about the companies I own. And the amount of people and information I get about Tesla, there's nobody who knows more about Tesla in the world than me. Maybe a couple other investors, but very few. And that's what's going to happen next.
Okay.
So I surmise all the information, data points that I get, and then I perceive what the next strategic decision my man, Mr. Musk, is going to make. And I look at the reality of the situations, and that's what's going to happen next.
Are you and Elon boys? Like, you guys text or like hang out or anything?
No.
I thought that I saw you guys tweeting at each other on Twitter or something.
We tweet at each other all the time.
All right.
Because
that's boys in the digital world. No, you're boys.
Like I went out to the cyber rodeo, I was like hanging out with his mom and Kimball and his sister, who's super cool, Tosca. And we're in the VIP area with all the VIPs, and Elon's like, twice the rock star I'll ever be. You know what I mean? He's like, people are like mobbing him. So I'm like, I can't even talk to the guy. It's like, I can't even, I'm not going to push through 100 people to talk to him. One day I hope to get a beer with Elon,
Yeah, I think that you could probably figure out a way to get that done. Talk to me.
Yeah, but it's like, part of it is like, because I'm an investor and I'm in the media pretty much every day about Tesla, I'm not access to information. Like, I don't have a separate relationship with Elon that could create insider trading issues or conflicts of interest. So in a way, it's like good that we don't have that relationship, because I would probably be accused of lots of stuff if we did, even though it wouldn't be true. So, I get all my information, the way I get my information is not directly from board members or senior executives. So, and that's, you got to play the game the right way. I play the game the fair way and I play it the right way, although I play it as right as possible, Yeah. So that's where you get into potential issues. And I do talk to a lot of CEOs. I do. And I really am trying to ascertain what type of people they are, because it gets real, you don't want to end up like Diane von Furstenberg and who is it? It's Barry Diller right now, insider trading. They clearly were insider trading with Bobby Kotick, having lunch with him, and then buying 100 million in options on Activision right before it gets bought out. I mean, come on.
So when you think about other stocks, Tesla, I think, is the biggest position that you guys have as an individual stock. What's the second biggest?
Right now, it's MGM Hotels.
All right. What's the theory or thesis behind MGM Hotels?
So this is getting really good. Okay.
All right.
So
I like good.
Like really good. Like, I really like this. Like, there's technology investments in Bitcoin, which obviously the upside is just like crazy, right? And then there's like real investments like real estate or hotels or whatever, So technology always has the most upside potential in my mind. That's why it's the largest percentage of assets that we manage is in technology investments, and including Bitcoin and things like that. So when you think about the economy moving forward, fun is the most important thing right now. And so Vegas is in a rebound like I've never seen. So there's been a lot of adjustments to what's happening in Vegas over the last 2 years because of COVID. And many of the companies, including MGM, not only had begun building an online gambling business, but also were in the process of sort of reassessing their overall operations and the use of technology within the hotel and gaming space. And because of COVID, they were forced to implement large amounts of innovation that normally hotel and casino companies don't do very rapidly, And so with this innovation, they've been able to increase margins into hotel substantially, like really substantially, because there were so many inefficiencies in the way hotels and casinos are run currently. So technology had an enormous upside in this leisure and hospitality area, and MGM rapidly employed it successfully. The CEO is really, really good, this guy Hornbuckle, and he's been working at the company a long time, knows the business, knows Vegas. So what happened was MGM decided not to own their buildings anymore and just be an operating company and sell off all the buildings for cash. And they've gotten all this cash over the years, and they've been buying back stock and then like like upgrading casinos and then making trades. So they just sold the Mirage Casino and bought the Cosmopolitan. So the Cosmopolitan is the best hotel casino in Vegas for fun, for young people. It's just an amazing asset. So they got that. And they also took full control of City Center, which is Aria and Vidara. And so they've gotten full control of all these assets. And then they sold off all the land and sort of the buildings under it. And they just finished that with a deal with VICI Properties, where now MGM just got $4.4 billion in new cash, which they paid off debt, doing these transactions, and now bought this European online gambling company called, I think it's called BetLeo or something like that, or Leo something. I don't know. Just bought it. Now they're expanding online gambling. Now, if you look at what's happening in California, for example, they're trying to pass online gambling here in California. The Native American casinos have had this monopoly on it, and BetMGM and DraftKings and FanDuel are trying to break this monopoly and get open in more states. But right now, I think they have 21 states or so with online gambling. So they've got all this convergence of the online with people going out, and the two areas for MGM that are really tough are their investments in Macau, which are basically shut down. So that's sort of this upside once China comes back, maybe in a year. And then you've got so the Macau thing is kind of the dog of the company. But you've got this like rapidly growing convention business. And I think because of work from home, companies are going to be spending more and more money on getting together employees and things like conventions in Vegas. And then you've got really just an unbelievable amount of spending as people are going out again. And we're seeing the average person spend a huge amount of money. So then sports came to Vegas, So now we've got the Raiders and the Golden Knights, but what's happening next is hopefully the Oakland A's are going to be moving to Vegas, we hope, and we expect a NBA expansion franchise as well in Vegas. And we've got the Super Bowl in 24 and Formula One at the end of 23. So Vegas has become this like sports city, and it's hugely lucrative and complementary to the other entertainment that already exists in Vegas. So I've never been more bullish on the future of Vegas than I am right now.
So when you start to think about this and you see a business like it, do you worry about the price at which you're buying, or do you worry about like short-term price movements, or do you just look at the fundamentals and say, hey, here is kind of our thesis on this, and we're going to hold this for a long time, so the price at which we buy it or the short-term price fluctuations may not matter?
No, price matters for sure. During the pandemic, we got into MGM at $9 or something. So that was ideal. And the only reason I bought it was because I knew their cash financial position, because they had just sold these casinos, and it's been probably, I think it was one of the best stocks I bought in the pandemic as far as returns are concerned, several 100%. But at $40, I don't think, because it's hard to value because it really hasn't had earnings, since the pandemic, and they're about break even now. But what it is what the assets are worth. And so when you like add up the equity value of the business, it's trading at sort of this traditional multiple, like 2 times the equity, which is, pretty normal for casinos. But the growth right now and the way they changed the business, I think it's undervalued by at least 20%, maybe 25% at the current price. So we value it closer to 50. It's trading at 40. So I like that. And they're solid assets. Vegas isn't going anywhere. So the real boogeyman that I think is also super bullish for MGM is this Osaka project in Japan. Japan's going to have, gambling by the end of the century, and MGM is really in the lead for building this thing. And they released like the plans for this thing, and it's amazing. It's just amazing. It's an amazing development. I expect Japan to approve it. I think it'll be great for the Japanese economy. It's a great investment for MGM. And so when you look out over the so we're long-term investors. So it's 22, and I'm thinking about what 2030 is going to look like. MGM is going to be a substantially bigger company.
Yeah, fascinating thesis. Talk to me about Bitcoin. I know that you've become pretty bullish on Bitcoin, it seems, at least from what I've seen you say publicly.
I got a Bitcoin business.
All right. Well, explain, one, what your thoughts around Bitcoin are, and then tell us about the Bitcoin business.
Well, boy, like look at what's happening to our global system, right? I mean, we've weaponized the financial system. So it's funny, Pomp, because I did this show with Peter Schiff the other day, and boy, was that frustrating. He's super annoying. Like he's really, really hard to like even have an argument with because he doesn't listen. Like he just doesn't care what you say at all. And it's super frustrating. And, I was trying to explain, once again, the premise behind Bitcoin in that there should be a global currency that isn't controlled by a government. And there's so many instances, even in the last year, that I can say where this utility has been proven over and over and over again. Right now, if you're a Russian, I have a friend who lives in Thailand, and he's like, yeah, all the Russians travel there and they've been stranded, like they're all stranded, and then their credit cards stop working. So now they've all become like Bitcoin experts, and everybody, in Thailand, has to kind of get good at Bitcoin because all the tourists are now transacting in Bitcoin because their currencies are all like banned or whatever. And so when you start thinking about the way governments have weaponized finance, and now what we're seeing with China and, their goal to, we're deglobalizing right now. And that makes Bitcoin even more valuable as a global currency, or a system of finance that doesn't involve governmental interaction. And so I think the utility of Bitcoin continues to grow. And what's happening now, what we're working on is we partnered with Gemini, and we are building managed Bitcoin accounts for clients so that they can build portfolios with digital assets, just like they're building them in traditional assets. And our work with Gemini has led me to believe, kind of like when I'm talking about Tesla, I don't know if this is a fact, but it's led me to believe that soon companies like Gemini will be able to offer all types of securities, including stocks and bonds, in a digital wallet by tokenizing all assets. And maybe we'll be able to manage like people's collectibles, their real estate, like all their assets in theory in a digital wallet with Gemini. So we're working with them to build that right now. And we've been slowly, because it's been, a very manual process of building what I will consider the most advanced, most amazing managed Bitcoin system for people who are not sophisticated enough to do it on their own.
And when you think about this, most clients, this is like 1-2%. This is like 10%. But what is most of the clients that you're talking to about Bitcoin? How are they thinking about this?
100% of clients today are interested in Bitcoin. They want to know more about it. There's a huge knowledge gap. That's an area that we're working on. Like tech people have a really hard time understanding humans that aren't tech people, and that was kind of like Steve Jobs' brilliance. And that's what kind of Bitcoin needs, is that person, maybe it's me, who can sort of explain it to the regular person in a way that they understand it and doesn't scare them away. And I think that's being done more by all these YouTubers and bloggers who are really bringing the message out in different ways to different people, especially underserved groups like the African-American community, which has really bought into Bitcoin, and I think it's a wonderful thing, because it's a community that's been inherently discriminated against by the banking system. So we have this enormous opportunity, but we have to educate people on how it works. And that's why the NFT thing pisses me off, is like every time people get ripped off and every time people lose money, it just hurts the credibility of the system that we're building.
Yeah, I tend to think that is exactly what's happening. When you start to think about Bitcoin for clients, you said they're all interested in it, but there's a knowledge gap. How many of them are looking at it because it's an inflation hedge, or they're looking at it because they think they can get rich quickly? Like what's the driver that is really pushing that interest?
Well, always money. Greed is always the first driver of everything. Not that that's bad. It's kind of like porn is always the first driver of internet, innovation. But like, I think we all understand the limitations of like Wells Fargo and JP Morgan controlling our financial system. They have abused our system for, I don't know, as long as they've existed, and people don't earn any money in the bank. So the Fed's going to raise, interest rates 50 basis points. They're not going to pay you 50 basis points in your bank, right? So like Wells Fargo isn't going to like raised their interest rate by 50 basis points today. So how is that fair? Like, what kind of system is that? So people don't want to hold their money in the bank. And we've been preaching this since I started in the business. Don't hold any money in the bank. Why would you want to hold money in a bank? They pay you nothing and they invest it and you have all the risk of the bank. Why would you have money in the bank? So people are saying, like, why would I keep money in the bank? I can keep my money in crypto and it becomes a store of value. And people are like, I'll just keep my money in crypto. And that's what I've done with my own money. It's like, why would I keep my money in the bank? They don't pay me interest on it. I can put it in Ethereum. I can put it in Bitcoin and over time, it'll probably go up in value.
I mean, that makes a ton of sense. And I think that there's a lot of people who, as they learn more about it, they start to say to themselves, wow, I didn't understand this. I closed that education gap. Maybe I'm educated enough and feel confident enough to store it myself. Maybe I need help with it. But it does feel like there's a ton of people. And one of the metrics that I always look at is the amount of Bitcoin that hasn't moved in the last year. The higher that percentage goes up, the more that just signals to me people are understanding this idea of Bitcoin as savings technology.
Yeah, buy and hold. Yeah. See, we buy and hold it. We don't trade it for clients.
Yep.
Like, we're not like trying to outsmart the Bitcoin market. You know what I mean? Like, it's at, let's say 38,000 today. So we buy more today. Like, we just buy Bitcoin just like we buy Tesla or we buy any stock. See, Bitcoin's easy in that there's a limited supply. Mm-hmm. So it's a store of value just based off supply and demand, just like gold. And, since gold really hasn't performed as it traditionally has, one of the reasons I suspect is a lot of that money has gone to Bitcoin that would traditionally have gone to gold. I don't know if that's true or not, but I suspect that may be true because gold should be soaring in this environment, right? And it really has been a piece of crap investment. So what's going on with gold? Do you think gold would be doing really well right now, actually? Right? All the same elements that make Bitcoin interesting make gold interesting, yet gold hasn't performed. So I think investors are starting to look for the digital version of these things, and that's Bitcoin. But there's a utility with Bitcoin. Like, I used the Lightning Network for the first time the other day, and boy, that worked pretty well. And all of a sudden, like on the Cash App, I did a couple transactions in Bitcoin, and it was like, wow, this works pretty well. And actually, Bitcoin has been the most solid currency in the world besides the dollar, over the last 6 months, probably, right? Look at the ruble or the Turkish lira or a lot of currencies. They've been like going crazy, and people are like, oh, Bitcoin's so volatile. And I'm like, really?
I mean, that is the way to look at it, right? Is that it's all relative. Volatility is relative. And also volatility.
Because I was to say, like, China is not going to want the dollar to be the reserve currency anymore, for sure. And individuals are kind of saying, I don't want the yuan, or I don't want the dollar, I don't want the ruble, I don't want the euro, and all for good reason, right? And what's left is Bitcoin. Mm-hmm.
Yeah, it makes complete sense. Ross, I could talk to you forever, my friend. Where can we send people to find you on the internet or find more about what you guys are doing over at Gerber Kawasaki?
Well, you can always go to our website, gerberkawasaki.com. Of course, we help people manage their money, the stocks, bonds, crypto, and such. We're probably the only firm that actually is integrated to all assets, digital and physical, I guess, other than physical real estate. And then at Gerber Kawasaki on Twitter, you can always follow me on Twitter. I do put out a lot of stuff on Twitter or on our YouTube page at YouTube at Gerber Kawasaki. But please follow along. I'm a big believer in young people investing in the future and the amazing technologies. Like, I'm really, really bullish on the future. I feel lonely now because everybody's so bearish, but I'm like, look at what's being invented in America. Like, we're bringing business back to America with all this great innovations happening in America, happening in Europe. And there's so much utility to things that we're building, whether it be this global financial system or like Starlink and the utility of a global internet system. Think about how great Starlink is for Bitcoin, because I can't transact Bitcoin in the middle of nowhere if there's no internet connection. So all of a sudden now I got Starlink terminals. Now I got Bitcoin globally, even in Antarctica. So, now I got this global financial system that's irrelevant of a government. Now I got this global internet system, right? That's irrelevant of a government. Like, wow, there's some really cool things happening.
I love it.
So I always love following you, Pomp, and I love what you're doing and the content you're putting out. And so keep it up, man.
I appreciate it very much. Before I let you go, one of our sponsors is 8 Sleep. What's your sleep schedule? You told me that you used to not get that much sleep. You getting better sleep now?
I always sleep pretty good. I'm a 7-hour guy, and cannabis
cannabis in 7 hours and you're good to go. You got all the energy.
Yeah, cannabis before the 7.
I love it. All right, I appreciate you coming on. We definitely got to get you back soon, and let's see what Tesla and Bitcoin end up doing. But you're carrying the torch, my friend. We'll talk to you later.
Thank you.
All right, bye.